Would the shortage of pilots be a limitation to the company's growth?
Sorry, can you
Shortage of pilots globally.
Sure. Okay. Well, Copa. Well, first, Copa have a training place where they train their pilots, and they have been very proactive in training and also mechanics. And second, in case of pilots, Copa offer very good salaries and is very proactive in taking pilots from other countries and from other airlines across Latin America. Okay.
Additionally, they're one of the most important carriers in the region, so they're very important in the region for pilots. It's a pleasure to work there. Actually, we did our research, and we found that employee satisfaction in Copa is higher among them than in other peers in the region.
Could you?
Sorry.
No, please.
Okay. How does the air traffic growth in LATAM compare to the statistic you showed for the whole world?
Or in Latin America, actually, after what happened in 2015, the deterioration of some Latin American economies, the airlines started to decrease their aircraft to make it more efficient. That's what actually Copa Holdings did. They used to have 202 aircraft in average per year because you can make some leasings. And at the end of 2016, they had 99. That allows them to increase their load factor and also to better their yield. So that's why you see a better revenue this year and also more efficient in their EBITDA and other margins.
It seems there is a price war going on in terms of ticket prices. I mean, what's your view on that going forward? The load factor has increased, for example, in 2016 to 80% relative to 75% the year before. But still, when you look at the revenue, it's almost flat. So that's a big issue, isn't it? How do you see that going forward?
So we have to understand that the main reason why revenue went down was because of yield. The Latin American economies, especially Brazil, went into recession. So in order to stimulate demand, all airlines have to lower their prices. And the reason because that happened was because oil prices went down, and Brazil is a dependent on oil exporter country. We see that the yield is starting to stabilize, so it's going to be the main revenue source for Copa in 2017 and moving forward. And also, Copa has moved a lot of the capacity from those countries to more potential countries, for example, United States, Panama, Dominican Republic, etc.
Well, actually, it's all over the world. I mean, it's not just in Latin America that you have lower yields in general.
Yes, this is true because that's one of the main reasons competition is a big factor, as Jose Juan mentioned earlier, because of airlines not being able to offer a lot of differentiation. What they compete based on is price. So what actually Copa does to differentiate themselves from their competition and actually be chosen by consumers in these regions and all, especially in Latin America, is that they offer excellent customer service. And to prove that, that's what differentiates them, so people are willing to pay and buy Copa instead of other carriers, even though there's a price competition. So we did a survey to have a fundamental research and discovered that 65.2% of Latin American consumers actually prefer flying on Copa if they have to fly in the Latin American region. So that proves that they will choose and pay for Copa instead of other airlines, even if there's a price war.
And can you clarify their hedging strategy on fuel? How do they execute it?
So they hedge approximately 30% of total jet fuel consumption. They use derivative instrument. They use options and swap mainly in the financial market of Panama and Latin America. Okay.
I would like, sorry, go ahead. Given the large weight you've given to the multiples analysis, could you expound why you think the resulting share price of 117 is the relevant, although it really trades above the multiples of the competitors?
Sorry, I didn't get the question. Could you please?
You've given 70% of your fair value to the multiples, right? So could you expound on why you think the multiple analysis results in 117 fair value?
Well, actually, the common practice in valuation of airlines is using multiples, enterprise value over EBITDA. Nevertheless, we wanted to include some fundamentals in our analysis. That's why we provide 30% in the discounted cash flow, and also we wanted to make sure that that the company was able to generate enough cash to investors. But actually, the common practice is enterprise value over EBITDA for airlines.
Yes. Can you show me the EV to EBITDA of the competitors and how they compare to Copa and why you then come up with 117 as a fair value?
Yes. Here you can see the enterprise value over EBITDA of some of the competitors, and you can see that Copa has traded at a premium during the almost every year. In 2011, you can see a premium of 70%, 2012, 81%, 2013, 135%. In 2015, you see 9.38% only, and it was because of what happened, when the investor noticed that something went wrong, and they flew out the stock. But right now, we are seeing that the investors are starting to price in the unexpected options that the stock had before, and they're starting to jump in the stock again.
I have a couple of questions. I mean, how does, like a follow-up to that question, how does the passenger cargo mix in terms of revenue compares to the industry?
Yeah, cargo revenue for Copa is only 4% of their total revenue, and actually it depends a lot on world trade. So actually, as world trade has been decreasing in the last 2 years, they are taking importance out of that part of the revenue and moving on to passenger service. So not only they have their hub and spoke carrier, Copa Airlines, but they also launched a new low-cost carrier in Colombia at the end of 2016 that's called Wingo, that is to protect their market share in Colombia specifically. And that has helped them to increase revenue in passengers and not depend so much on cargo.
And aren't you afraid of the competitors like LATAM in the region?
Well, the thing is that Copa has a very geographic advantage to its competitors because it's in the middle of the continent in Panama. That allows them to offer extensive reach without having to have 2 or 3 hubs as LATAM or Avianca. So actually, it's less expensive for them, and that allows them to be more profitable.
In addition, it would be good to remark that in Latin America, you have a lot of airspace taxes. So maybe for the low-cost carriers, such as Avianca and others, they're not a threat for international flights for a hub and spoke as Copa does. So actually, Copa has a very competitive advantage. It's a different continent. It's not like Europe, where you have open space with the hard treaties. There you have a lot of different countries with different interests, and that's actually what made Copa unique in America, their location in Panama.
Okay, one last question. You've mentioned that they attained the highest load factor of 84%. Do you believe that they will be able to sustain that load factor?
Yeah, we believe that as the company, they have 80% in all 2016, but we believe that the company already achieved something. They are better at managing capacity, but if their revenue start to grow more, is the demand start to grow more, the company probably will maximize their efficiency and maybe will have a little bit lower load factor. We also did a sensitive analysis of the load factor and realized that load factor is not the main threat to the company.
So how much is the percentage cost of fuel?
The jet fuel is 27% as 2016.
Okay, and how much was it in 2011, for example?
Well, in 2011, jet fuel prices went down.
Or 12, if
okay.
you like.
Yeah, in 2015, 2016, oil prices went down. So in 2015, it was closer to 23%. In 2016, it went to 26, 27%. And in 2012, it was around 30%, 31%.
Okay.
If I have to divide Wingo from Copa, what are the profit growth coming from? I mean, how do they look like? For Wingo and Copa, because that's one budget airlines, the other one is not. So how are the growth drivers? What the growth would be like?
Yeah, well, there are 2 main growth drivers. The first one is demand, passenger demand, and it's very connected to RPMs and macroeconomic factors. So when an economy does well, usually demand rises in that country. And another driver is consumer confidence index. We have seen that when consumer confidence index goes up, they tend to spend more money on leisure services like traveling, and that's when revenue goes up. I think that if I understood your question,
That's
I'm sorry.
fine. Yeah, just wondering if Copa doing well as well. besides Wingo?
Copa, no, actually Copa, Wingo, it's only right now 8% of the revenue.